Hey traders, Steven here. It's Thursday, April the 4th, about midday. Market's down a little bit today, which is kind of what we expected probably after yesterday's kind of sell off at the second half of the day after the market gapped up in the morning. So not really a big surprise. The market needs to pull back a little bit or consolidate a little bit, but we're going to look at the overall indices, the breadth, and we're going to look at some individual stocks today. We're going to look at what sectors are strong, and then we're going to dive deep into those sectors and see, if the market is pulling back, if this is just a pullback like it has been, we're going to see, what potential stocks could be setting up for a pullback. So we're going to look at that. Before I get into that real quick, I want to throw the disclosure up there just because we're going to be looking at some individual stocks, and I don't want you going out and buying this stuff blindly. I'm going to read the first sentence. You are responsible for your own trading decisions. Always do your own research before investing, in any of the above securities. I'll let you read that for a second. Okay, seconds up. So the most important thing is personal responsibility, as always in trading. We're going to come back to that. So let's start with the S&P 500. We're going to look at all three major indices, but I want to start with the S&P 500 because, it's been a really interesting ride, since the beginning of 2019. Throughout the year, the market has peaks and valleys, and we really haven't had any valleys yet. It just has shot straight up. This bear market came down so quickly. It literally went straight down in the final three and a half months. Let's just call it 3 months, kind of from the third week of September to the third week of December. And then it went straight back up. This is so far, we're not out the woods yet, but this is considered, a V-shaped bear market, which these are actually rare. I think there was one that looked kind of similar in 1998, but if you go back and look at the 2000 to 2003, 2007 to 2009 bear markets, there were multiple legs down, where this is just a straight V-shape, no second leg. So right now, just kind of the way I see it is, for the S&P 500 and the Nasdaq, you have the 50-day moving average, this green line crossed back above the 200-day moving average, the blue line, right? So if you want just a simple, trading system, you don't want to hold a mutual fund, but you don't want to ride it all the way down, you could just play this where, you're in just the SPY, for example. We'll look at some examples like that. When the 50-day is above the 200-day and you're out when the 50 is below the 200-day. Would have saved your bacon in the major bear markets. Would have saved some bacon here. You probably would have been in around the same time frame, maybe even a little bit later, gotten in a little bit later than where you got out, but you missed this whole heartache right here. But right now sometimes I count pullbacks, right? I count pullbacks like I count bases, and a lot of times I talk about if it's already pulled back twice, or if it's already, created two consolidations on the uptrend, typically the third one has, the potential of, being more of a longer consolidation or a longer pullback, just because the market can get pretty tired. Now, it could just snipe this, all-time high off, get everybody excited before it does that. But, I'm kind of looking at the pullback zone, and you can see right here a few weeks ago, the market just looked like it was rolling over and then it reversed, right? And then I recognize that as a kind of a super rally, and we're going to talk about that in a minute. And then it looks like you get this nasty red bar, and then it finds support at the 20-day and goes right back. You got two pullbacks, and now it broke this level, right? So it's clear to me, this is a super rally. Now, does this continue? How long does it last? I don't know. But I'm trying to kind of mentally prepare myself for possibly just a kind of a bigger pullback, test the 50-day moving average again, test this crossover level, and, really that's kind of the zone I'm looking at. I think what would be healthy is for it to pull kind of back in the zone, consolidate for a little bit, and then hopefully get us to an all-time high, and then you can completely say the bear market's over. To me, I would say the bear market's over, but, technically speaking. But, if it does break this crossover level, I'm really kind of looking at this reversal bar, because this is where a lot of support came in the market, right around the 27, 22 level. If that breaks, I kind of have last line of defense, smiley face, then all options are on the table. But again, I'm not going to look at it like, oh my gosh, the sky is falling, it's going to come all the way back down here. I'm going to be open to the possibility of a shakeout where it just kind of runs all the stops and then reverses like it did right here, right? It just reverses, boom, scares you out. So it pays to be a bull. It doesn't pay to be a bear. Trust me. I learned that over time. So you have the golden cross, the 50 above the 200-day, but I'm kind of looking in this zone in the 2760 to 2800 zone as potential pullback. It could continue to ride the uptrend, but you just kind of got to mentally prepare yourselves because sometimes it can overshoot the pullback. So this is the Nasdaq, and I don't really have anything else to add to this chart except for, man, this is a steep climb, right? And then when you got this, well, as soon as I got this, I was thinking super rally that goes all the way back to 2017 where it just breaks a 20, finds support at 50, breaks 20, finds support at 50, and so on. So that's why a lot of times, for my trading system, I started using 50 instead of the 20-day because I come across these super rallies and you would have kind of had to keep getting back in, whereas if you get a little bit more breathing room, you're going to participate. So it's already happened twice, and then yesterday just kind of a gap off, a sell off in the second half. Nasdaq's down a little bit, but again, I don't know if it's going to gun for the all-time high. It kind of seems like a natural magnet for the price action and maybe pull back and just gun for the all-time high. Literally probably run every short, run all the stops on the short side, cover, gap up, and then maybe kind of a deeper correction that we've been getting. So don't get euphoric. That's important. I got some stocks that are really working well. I think the most important thing sometimes is when I feel that euphoric feeling where let's say you're almost fully invested and the market just keeps going up and then you just gotta buy. A lot of times I've realized that in the last couple of years that's probably a good time to be looking for exit strategies if you don't already have rules in place for certain positions. So you're not going to get it exact. I've learned that. Don't try to get it exact. Just focus on the zone and follow your own personality and do what you are comfortable. It's very important. What's good for me is not good for you. That's why people have shiny object syndrome and they bounce from strategy, program to program because they try to replicate my style, right? Exactly how I trade, and then it doesn't match their personality. They abandon ship when they have a drawdown period and then they move on to something else. It's okay for you to try to match my thinking when I'm thinking about trade, but you got to apply that to your own strategy. So the Russell 2000, this had a deeper pullback. It has not had the golden cross yet, and there's a lot of ways you can look at it. Straight off from the bottom, it pulled back to the 38 fib retracement level, right? And it's just kind of creating a flag. Well, the flag broke yesterday, but it couldn't really break the middle of this pivot. So that's when I'm like, okay, we'll see. But if it comes back down, that kind of negates the breakout from yesterday. Couldn't clear this, which I think is a very important pivot. So let's kind of look at, more of a rounded pattern, which I would probably expect the selling pressure that came in yesterday as it kind of come back. And if this does hold, you kind of might have kind of a tiny mini head and shoulders. But again, if this 15,000 level, or 1500 on the Russell breaks, that should just tell you that you need to make sure that all your positions have a game plan in place, because we don't know what's going to happen. This rally way overshot my expectations. It cost me a little bit of money, although I've made it up in the last few trades, but it cost me a little bit of money thinking that we're going to take a second leg down, we're going to take a second leg down. I think I learned my lesson, but I adjusted, right? You adjust. So just stick to whatever plan you had in place when you bought a position. I think that's the most important thing. What do I want to show you? I do want to look at the VIX. Let's look at the breadth and we'll look at the VIX. So the percent of stocks above the 20-day EMA is still bullish, right? In the S&P 500, 79%. But if you look right here, April 1st that was 3 days ago. Monday is when the breadth peaked. This is a very short-term indicator, so it can't always be reliable. The shorter the term indicator, the less reliable it is. But it's important to know that we did break an all-time, or excuse me, we did break a rally high yesterday, but the short-term breadth did not. Something to keep an eye on. Now, if you look on some of these individual sectors, you can see that technology did pop really strong. Financials kind of moved higher. Discretionary moved higher. Industrial did not. Industrial kind of peaked a few days ago. Healthcare is weak. You can see it's making a series of lower lows. It's not breaking these pivots. Staples is getting weaker, which I'm fine with that. Energy is not looking strong. Look at kind of this surge from materials. So you're kind of looking at your metals, your materials. We're going to look at some interesting charts here in a second, but very, very strong. And then utilities is making a low, which again, I'm okay with that because the utilities and staples are defense in nature, but also they have an inverse relationship with yields. So the yields have risen the last few days. But it's just something to keep an eye on. I don't ever make decisions off, short-term breadth. Pay more attention to longer-term breadth because I prefer lagging indicators because I don't want to talk myself out of a good trade. But it's something to pay attention to. So the S&P 500, the percent of stocks above the 200-day moving average is still incredibly bullish. The long-term looks a lot better, 71%. It's hard to be bearish with that kind of breadth. I mean, that's strong breadth right there. And you kind of have to look at it. You look at the price action first, and then I always look at the breadth second. Is the breadth following the price action? And I would say absolutely it is. So, it doesn't mean that it can't go down. It doesn't mean we don't need a breather or a deeper pullback to kind of digest those gains. The pullbacks are healthy. Consolidations are healthy. You don't want it to go straight up because if it goes straight up, remember what happened in early 2018? It went straight up and then it came straight down. There was no pause in this. So it's important and kind of look at these shakeouts, right? Shakeouts are good and healthy. I know they suck while you're in it, but they are good and healthy if you're willing to have a game plan to get back in and not, think Chicken Little, the sky is falling type of thing. But this looks good to me. So on the very, very short term, I just kind of want to look at the VIX real quick. Let me kind of shorten this a few years. All right. So, the VIX, you can see right here, the VIX, you got the S&P 500 below here. You got the VIX right here. So right here, the VIX made a low, which you want, of 1288, right? And then when the market, the S&P 500 broke this pivot, so moved higher, you want the VIX to continue to break to lower lows. It did not. Okay, so that's just kind of another thing to pay attention. There's some VIX buying in the market a little bit. And it's up a little bit today, and it definitely reversed yesterday. So my only point is, on the very, very short term, and I'm just talking the last few days, the VIX, there's kind of a negative divergence in the VIX. The price moves to new highs, but the VIX did not move to new lows. Just something to be aware of. One more thing to be aware of, and again, I'm still bullish, but I'm just looking at I'm just looking and seeing what I see. The IBD 50 Innovator ETF. This is my type of stocks. This is the strongest 50 growth stocks in the market, technically and fundamentally. They're getting hammered today. And I looked, and probably about 13, 14 out of 50 are up. The rest are down, and some of the leaders are down a lot, which is kind of dragging down the index. So it's just something to, when you see a lot of times leaders can start to break down first, okay? And sometimes that breakdown just means a simple pullback. Doesn't mean a bear market, right? Sometimes they can start to break down first. So when I see, if we kind of go back here, and I see the Nasdaq is down 0.5%, but the IBD 50 ETF is down 3 times that, I'm like, okay, there's some profit taking in the leaders for sure, okay? So just something to be aware about. This could just come back around today. Sir, as you can see, the Dow is higher. I'm just kind of curious what that is. Okay, that's because you got Boeing and Disney are up. So you got kind of a price-weighted index. I I don't really pay attention to the Dow. To me, it's just, it's 30 stocks. That's not a good representation of the market. But let's go into the market summary and right here, and let's kind of look at what's moving. So let's look at the sector spotter. So you got industrials and financials, energies, they're up. I mean, those are all aggressive sectors. So technology, there's some profit taking. REITs and utilities, those are defensive. Those are going down, and it's probably because I bet yields are going up. But banks are up also, positively correlated with yields. But this is just a one day. So let's biotechs, disk drives, drugs. There's something going on in here. I haven't looked at the news yet. I don't know if there's any price, wars or anything political happening. But there's definitely, we looked at the short-term breadth on the healthcare. There's definitely some weakness relative to technology and some other things. And then right here, I'm seeing some profit taking. So just be cautious. Brazil, as far as the international ETFs, that's up the most, which is good because I emailed you guys on Monday that there was a reversal in this, so with some volume. So it's a decent little pattern there. Yields aren't up today. I am just interested to see. Nope, I don't want. I wonder why it's not giving me the weekly chart. Actually, let me come over here. Let me just look at the 10-year for a second. Yeah, so the yields have bounced off the bottom this week, even though they're kind of up today. They're in a downtrend, but yields have bounced off the bottom. That's why banks have bounced this week. That's why utilities and REITs, the inverse relationship, have been pushed down. So 1 week doesn't make a trend. Yields are in a downtrend, which is kind of surprising, but it is what it is. So we looked at the VIX. We looked at the breadth. Kind of looking at some short-term things here. Let me just go to sector summary real quick, and then we're going to look at some other things. We're going to go fishing. Let's go fishing here in just a minute. So financials are up. What is in the last 1 week? So you have materials that are up this week. Financials are up. Staples, utilities, REITs, all the defensive stuff is down. Again, I see that as positive, but it also could correlate with the rising yields this week. So it doesn't necessarily mean money's plowing into everything aggressive to push the market higher. There could be other things going on. So let's look at so materials. Remember that. I want to look at the last 1 week. So what I'm doing now, I always talk about, you want to look for the strongest stocks in the strongest industries and the strongest sectors. So this discretionary, this is a sector, right? This is the big picture sector. You have 9 or 10 sectors. And then it's broken down in individual industries. So in consumer discretionary, you have gambling, auto parts, hotels. Those are discretionary industries. And then you can click on that and find out what the individual stocks, what the strongest stocks are in the strongest industries and the strongest sectors. So it's really what because a stock's performance, some say even up to 50% of a performance could be just the overall strength in the sector, right? So when I see a stock, I always say, okay, what's the sector doing? Are there other stocks in that industry or sector that are showing strength? Because I want them all to go up together. I don't want it to be a lone wolf here. So let's just look at the last week. So in the last 1 week, so what I'm doing is I'm scanning all of these industries to see where's the money been going into. So I got gambling right now, looks like the winner in auto parts. That's typically more of a defensive nature. Tires. Okay, so there's some money piling into auto parts and tires. I don't know. It doesn't really excite me, but financials, you can see that even though there's some broad gains in all of these industries, right? I look at, is there a lot of green in there? Okay, let me go after gambling. Staples is kind of all over the board because you see some big red. Drug retailers are getting hit. Energy is kind of a little bit of a mixed bag. Financials, you can see there's green everywhere, right? Healthcare is not a strength. Industrial, right? So airlines, transportation, industrial. Okay, so there's a lot of strength, not just like one pocket up here where you have tires and distillers are up 8% each. You have a lot of things in this whole sector that are up, over half of them are up. So we're going to come back to industrials, commodity chemicals. Technology. Okay, so let's just kind of divide and conquer here. Okay, that's up 6%. That's up 6%. Let's just look at a couple of them that are. I can't obviously choose them all. Start with gambling, and then I'll kind of go to auto parts and the tires, and you know what might be connected to that is airplanes, kind of the auto industry. Okay. So what I'm looking for is I just clicked on gambling, and now what I want to do is look at, okay, is there broad participation in the discretionary? Yes. And is there broad participation within the stocks and gambling? Yes, right? So you have all these stocks right here. You know, what's up the most? Wynn Resorts. So Las Vegas Sands, I'm just kind of naming some names. So then I go here, I was like, okay, if we are going to get a pullback, man, that chart looks really good. So, and why I like this is, so Wynn Resorts is, again, a nasty decline, 50% from 198 to 91, so over 55%. Got a nice little double bottom, and that's coming out of here. Hit resistance, right, at the 200-day moving average, cocked back, and then busted through. Look at the volume, right? You got some volume right here. Let me get rid of this inspect. Volume right here on the uptrend. That's what I like to see. No volume pullback. So I always pay attention to price and volume. On the uptrend, is there accumulation? Check. On the pullback, is there distribution? No, there's not. And then it takes another leg up. So this is extended. I would not buy it right here just because, you know, I would have to put a stop way somewhere down here, and that's a pretty wide stop. But if it retraces a little bit into this crossover, you know, kind of a 50% retracement, this is interesting because here's why I pay attention to price volume. It's highly unlikely that the institutions, because I'm not buying this isn't you and me, this isn't, we don't have that kind of money, have that kind of volume. These are pensions, mutual funds, institutions that are just making this volume go up. It's highly unlikely that they're going to turn around and sell this. I haven't checked to see if this was an earnings, you know, report. It very well could be. By the way, we're about to enter earnings season, I think, in a couple weeks. So always know where your stock is going to report. But it gapped up out of here. These guys that just bought it, they're not going to turn around and sell it. They might even, you know, buy more on a retracement. So this is a really good setup. You just, again, it's showing strength when the market's down. That's a lot of relative strength. And I like the fact that it's been beaten up already, right? So it's coming out kind of a little first stage pattern here. I wouldn't even call this as the complete first stage. Maybe it comes back and consolidates, but maybe this thing turns it around. Let's look at Melco. I'm not familiar with that name, but guess what? Boy, that looks pretty good too. A little bit more distribution, but these gambling stocks are starting to look the same, right? Does that pattern look the exact same or what? You know, has surged with overall stocks, you know, since 2019, pulled back, nice flag, right in that 200-day down, reversed, boom. So it looks exactly the same. So again, a retracement on that, a pullback, I'm not impressed. I mean, you can see kind of the double bottom, and then it just came back here. You could say, yeah, Steven, it's in a bigger first stage pattern, but the other two stocks are stronger. Like, why buy the weaker one? Okay. So, International Game Tech. Again, another name I'm not familiar with. Nope. I can go back to this stock, and this stock looks better. Las Vegas Sands. This kind of be our last one. We'll kind of look at this. Yeah. See, that looks better, right? It looks exactly the same as the first two, right? Showing strength. Showing strength when the market is showing weakness. So there's some money piling to gaming stocks. I'm not telling you to go out and buy them. I'm just telling you to maybe have a glance. All right, so gambling. Might as well look at auto parts while we're here. That is a lot of broad participation. So again, we're looking at strong stocks, one of the strong sectors. I like it. One could say auto parts is defensive in nature. Yes, you could. Let's just kind of have a look-see. SuperiorIndustrial.ca. I don't really like it. If I move the volume below the price, kind of have a better look at it. Like, I like the volume. It's came down and found support at 450. I don't know. I like the gambling stocks better because they're already breaking the pivots, right, of the pullback. So one could argue there's some major institutions stepping in this, right? You can make the argument with that. But again, when you have so many choices, why not buy the stocks that are, or consider, I'm not going to tell you to buy anything, consider the ones that are proving themselves to you. I don't know this one either, but let's take a look at it. Yeah, you know, again, it's just coming off the lows. I'm just going to immediately pass on that one. Cooper, I assume that's Cooper Tires. I bet I could. These would be a bunch of weekly reversal patterns. No, but I don't want to get involved. I just don't. I mean, look at that. Do you want to get involved? I do not. So I'm going to kind of move out of this. Let's go back to the industrial. So gambling looks better in auto parts. We compared them. I wonder if tires looks the same. Let me kind of. Well, that's not. Oh, well, that's Cooper Tire. Okay, so let's just look at this. Yeah, if you can see a pattern there, I cannot. I got a kind of a double bottom test. That looks good, but it is straight off the bottom. It would need to retrace. There's a lot of volume over here, but I've already found better. Let's look at the real Cooper Tire. Yeah, that chart looks ugly too, right? It failed to, or did barely make by 3 pennies a higher high, and then just rolled over, and is now, to me, that looks like a dead cat bounce. I'm going to look at something else. Actually, so tires, let's look at something else. Just for giggles, even though it's not up a lot, if yields do bounce, up FinTech. That doesn't have a scooter, so I'm guessing that is an IPO. Yeah, that straight up, yeah, but another Chinese stock. Scooter rankings aren't that good, but let me kind of look at something that is showing some strength. So, okay, to me, it almost looks like the overall market. This one, kind of surged straight up, had a couple pullbacks, but this pullback undercut this one, and there's some pretty good distribution on that pullback. So, again, you want a lot of volume on the upside, low volume on the downside. This one doesn't cut the mustard. I'm immediately going to pass. Ameriprise, the company I used to work for. How's the stock doing? This one looks pretty good. You got, kind of a good consolidation and a gap up. I'm wondering if that's an earnings gap, but look at all the accumulation right here. A little distribution, but that's not as much as the previous stock. That looks okay. I wonder what it looks like on the weekly chart. Yeah, so on the weekly chart's okay. But again, it's way down. I tend to like the gambling stocks better. They just look smoother, right? And then when I look at a bunch of charts and I say, okay, I gotta pick something. I'm gonna go after the smoothest rides. So investment services. Let me kind of open up that. Look at one more example. What else? Stifle, I think I already looked at that. Victory, this is Morgan Stanley. There's another Chinese stock. Wow, yeah, Victory, there's a lot of strength in this. This thing, yeah, it's up a lot this year from 866 to 60%. Yeah, I mean, it's just, I can't find an entry here. It needs to consolidate before I consider anything. I mean, this was a kind of a crazy wild pullback, and then it shot straight up, so I can't really find an entry. Obviously, I'm going to look at one more thing. What's up the most? I kind of want to pick something in technology. Okay, that's a dollar stock. So let's just kind of look at technology. There is some strength. I'll pass on this. This is in a downtrend. It's still in a first stage pattern. I'm seeing a little accumulation on the right side, not a ton. There's better options. Okay, so just going to look at a couple here, and then there's one more thing I want to show you. I'm going to try to keep this 30 minutes. Yeah, I mean, this CommScope, I don't know anything about this company. From 15 to 24, that's a pretty legit move. Pull back. There's a little distribution here, but the accumulation on this, I think, negates the little distribution in here. And now it's kind of at this pivot. So to me, I'm looking at this, I'm like, maybe it creates a handle, kind of cocks back a little bit before it goes higher. So I'd kind of look at that. So I think that's it. I just kind of wanted to kind of walk you through the process a little bit. See, the Nasdaq's coming back. Look at that surge off the bottom. Let's look at the market summary. There was one thing I was going to show you that just really stood out. So every day, this is what I do. I say, okay, I'm gonna organize industry sector stocks. What's the strongest? What's the weakest of the day? So, you know, we already went through this, but I kind of want to go down here to show you. Look at this platinum. Platinum, sugar, cow, so livestock, coffee. Let's just look at the DBA and then we'll kind of ag. That's not a great looking chart, but I did see platinum, and look at that surge. Let me kind of back this out on the platinum and go to the weekly. Man, that's a big green candle. And if I lower the volume to below the price, where you can kind of see the volume bars, there's a ton of accumulation on the platinum. Now, if you look at the bullish side, it made a higher low, right? It didn't come down and undercut this. And now it's breaking this first stage, you know, 2 pivots right here. It's surging through it. Now, I'm not going to buy anything on a gap day. I'm just saying it looks kind of interesting. So I hope this all was helpful, this kind of process, what I walk through. Stock charts, I believe, even the free version, you can do that, the industry stocks, what we just looked at by yourself, although I don't think it's allowed intraday price, but I think you can look at the daily price and kind of look at that. So let me know if you have any questions.